everyone, welcome to Morning Trade with Moneycontrol in association with M-Stock by Mirae Asset. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So guys, keep commenting live on our YouTube feed and we'll have them addressed by a technical analyst later on in the show. Before bringing him on board, let's see what the global handover looks like. It's definitely not a great set of cues to work with. Europe is back again in the red, reversing gains which were made in the previous session as global volatility continues to ail the market. Stock 600 ended about 0.7% lower. The basic resources slid about 5% to lead losses as most sectors, major bourses, they all ended in the negative territory. Wall Street indices also closed lower after a chopping session. Federal Reserve Chairman Jerome Powell reiterates his commitment to combat inflation through higher interest rates, but adds recession couldn't be ruled out. So clearly something that could have perhaps spooked the market. Asian markets open higher despite a weak handover from Wall Street and even in the Europe. The SGX Nifty indicates to a positive start for the Indian market. But let's understand what are the larger trends playing out as we speak, especially on the global front. Jisang, the CEO of Mirae Asset Capital Markets, joins us right now. Jisang, thank you so much for taking time out and joining us this morning. I want to understand what are the trends as far as the FII flows are concerned, because if we look at the Indian markets, FII have sold stocks worth over 2 trillion so far in 2022. At what point do you see the flow turn positive? Are you getting any cues for the next couple of quarters?
Good morning, everybody. There were many news flows came from US last night, so it became a bit busy morning now. So let me start from the historical data. Foreign investors sold 4.1 lakh crore since 2021. Current selling is continued from last 15 months. The pace and amount is much higher than even 2008, so which is hurting India market this time. We can assume that since the real tightening cycle is coming back after decades of low interest rate era, global investors may consider new asset allocation strategy too. That's why it is not easy to foresee short-term foreign investors' behavior. We can just evaluate current Indian market situations. Because of US rate hike, question mark hangs over emerging market currencies. India is not the exception. Many investors are concerned about the depreciation in Indian rupee, especially since RBI hiking cycle is slightly lagging compared to other countries' rate hiking cycles. So current account deficit is also widening. So for us to expect back to India market for foreign investors, we need to observe some point. Firstly, clear sign of inflationary pressure outlook because stock market is moving based on expectations. Some clear picture will give comfort for investors. To continue with the India growth story, Indian companies to post strong earnings. So yesterday night, Fed chair commented there is a chance for recession and we will see dropping earning estimate from now on. So now we have to focus on how corporate results would pan out in next 2-3 quarters and how India incorporation is handling supply side inflationary pressures. There are concerns, obviously. However, period and amount of selling off from the foreign investors have been already longer than other downturn cycles, and inflationary pressure was anticipated more than 6 months ago.
Right.
So I believe chance for the stock market is coming sometime soon once people are getting confident about the easing inflation pressure.
If we look at Indian markets specifically, do you think the growth of retail banking in India might get hit as markets seem to be heading towards a bearish phase?
So now India market is getting close to entering the bearish phase. It has been relatively outperforming compared to other emerging markets. Still, there are but several major issues making foreign investors reluctant to come back to emerging market and India market. We see firstly oil price correction since last week, but one of the reasons is now worries for the economic downturn when supply side issues continue to exist. Because of US rate hike, 75 pips at one time is a so-called giant step, which has never been happened since 1994. And the Power confirmed that there will be a series of giant steps this year. Then emerging market currencies might lose some attraction. Foreign investors' concerns on India economy, whether India will overcome inflationary pressure and assurance on continuance of a higher growth rate coming years is now issue. Yes.
Okay, all right. But overall, what is the trajectory you foresee for Fed and for central banks across the world in the months to come?
So actually, since Fed, the Jerome Powell has mentioned that there is a chance to recession, but he has been confirmed that the first priority at this time is the inflation within the control. So the other central banks also should follow this trend. But so then some downturn will happen. The downturn and the inflationary pressure will continue some time more.
Okay. Well, here's hoping India continues to outperform its peers, and not just peers, but overall as well. Things should look steady, hopefully, in the next few months. But Jisang, thank you so much for taking time out and chatting with us about the big trends playing out, FII flows, as well as the view on Fed rate cycle. Pleasure having you on board. Let's move on and talk technicals with Ruchit Jain of 5 Paisa. Ruchit, good morning and thanks for joining us. How's the trade setup looking to you? It's the weekly expiry day as well. So what kind of a momentum should we expect?
Yeah, very good morning, Karuna. Well, yes, a weekly expiry day, and just one day ahead of the weekly expiry day, we have already seen that option writers have started forming decent positions. Now, if I look at the data, then 15,300 put option has decent open interest outstanding, and on the higher side 15,500 has attracted good amount of fresh writing yesterday. So I think for today's session this would be the range to watch out for, 15,300 to 15,500. And now if I look at a bit of FII's data as well, recently we have seen that FIIs had started forming short positions when market was around 16,700. And at that time, their long-short ratio was around 51%, means 51% of their positions in the future segment were on the long side. And when they started forming short positions, they continued that till their long-short ratio dropped to up to 11%. Now, 11% long-short ratio means they had about 89% of the positions on the short side, which is very rare, which we usually see very rarely. And when such things happen, the views are generally very bearish. Now, in last 3 or 4 trading sessions, they have covered some of their shorts, and this ratio has improved from 11% to about 21% now. This is an indication that since we are in a pre-expiry week, means just ahead of the monthly expiry, this is an indication that FIIs are now booking some of the short positions, and the long-short ratio have started improving now. So I think this would provide some cushion to the markets in the short term, and we might not see some very sharp sell-off till the monthly expiry, that is next week. So we are expecting a range to play out in which 15,300 to 15,400 would be the support range. So for today's expiry, in case post opening we see any dip towards that 15,300, 15,400 range, one can use this as a buying opportunity. But yes, play the range on the higher side. 15,500, 15,550 would be the range where one should again look to start booking profits on the long positions.
Okay, all right. Let's also talk about some stocks that could, be in the limelight today. I want to flag off Bajaj Auto first. They have a board meeting on 27th of June, and it's to consider a buyback proposal. So clearly, Bajaj Auto has been, in the news for that as well in the past. But let's talk about the technicals of Bajaj Auto, because if somebody had invested, X amount of money 3 months ago, they are literally sitting at the same level 3 months after. So tell us, what is the trend you foresee for the next couple of months or for the latter half of the year?
So, Karuna, one can take it as a positive as well. Last 3 months, at least, they have not, the portfolio has not gone down in case of Bajaj Auto, but the way the broader markets of many of the large cap stocks have seen a sharp correction. Now, auto space somewhere has seen a resilient. You look at Bajaj Auto in the two-wheeler space, even TVS Motor, or in the four-wheeler space stocks such as M&M Maruti. This entire sector, I think, somewhere has shown a good relative outperformance to the broader markets. So, recently we did saw some one-day correction when the announcement came in Bajaj Auto that the buyback proposal may have been deferred, or they have to think, company has to think over it. But in this case, it was just a one-day correction, and post that we have not seen any follow-up selling. And the 200 DMA for the stock is acting as a support, which is placed in the range of 3,500 to 3,550. So I think the downside as of now looks limited from here on. We could see some positive move again towards the 3,800, 3,850 mark. So I would say if any positions are there, then one should continue to trade with a positive bias till the stock is trading above that 3,500 mark.
Okay. Could we also see some momentum on Vodafone Idea as well, because they're looking to raise funds around 430 odd crore rupees from the promoter Euro Pacific by issuing preferential shares. So this is one stock which on the back of this corporate news could be in focus. But what about the price movement? Do you see any action happening here?
Historically, we have seen many positive news coming in between of raising funds in Vodafone Idea, but we have never seen such follow price movement, at least in last couple of years, where the stock has given good returns to investors. So I think if any kind of such positive move comes in case of the due to this news, then at the higher levels, 9.5, 10 rupees would be the resistance range. I think if one is looking from medium to long term investors, then within this entire space, Bharti Airtel looks much better bet rather than Vodafone Idea. So use price up moves around 9.5 as a good opportunity to exit from the stock, and better to shift it from Vodafone Idea to Bharti Airtel, which could give better returns from mid to long term perspective.
Okay, all right. What about another mid-cap name, IRB Infra? I want to flag off some news here as well. They've received an arbitral award worth 308 crores, and they've received 75% of the arbitration award of 419 crores from the SPV, which is called IRB Pathankot Amritsar Toll Road. In fact, it was the EPC contractor for this particular BOT project as well. So IRB, any momentum expected here?
Well, not really. We have seen good bit of volatility in the recent past, but the recent price up moves have not been able to form any higher highs. So we could see if any pullback moves come around 180, 190, 195, this will be the resistance range for the stock. But from a mid to long term perspective, I think on declines, we may see the stock again testing that 160, 155 range. So if one is looking to add the stock to the portfolio from mid to long term perspective, wait for some dips around that 155, 160. So I think that would be the good range to take some contra calls in this one.
Okay, sure. Let's bring in some viewer queries as well. Lots of questions have been posted on our feed already. I want to first go to Arka Jyoti Saha. They want your view on NMDC. Talk to us about what the technicals look like and what's the chart indicating.
So the metal space recently has seen very sharp correction from the highs, due to which the momentum readings have now gone into oversold zone. So although the trend for the stocks remains negative, but due to oversold readings, we could see some pullback moves in near term. But do not expect any major upside in the stock. 108, 110 could be seen in short term. So where if you have bought it from a trading perspective, then you can look to lighten up some positions over there. So 108, 110, any pullback move towards that, either lighten up there or you can again review when the stock comes there.
All right. Moving on to the next query. This is from Trilok. He wants your view on Adani shares and specifically on Adani Wilmar and Adani Port. If you could give us some, some insight into the short-term and the longer-term trends that you foresee.
So Adani Wilmar has a very limited chart history, so I can only give you support and resistances based on the data that I have. 525, 530 is the immediate short-term support range for the stock. So if you are holding, you can keep a stop loss below 520 and continue to hold. The resistance would be seen around 585 in near term. So this is very short-term since the data is limited on charts. But yes, Adani Ports, we have seen some correction in the recent past along with the broader markets. Now we believe that on the medium-term chart, the major support for the stock is coming around 620, 600 range. So maybe not immediately, but next 1 or 2 months perspective, the stock could go and test that 620 range, where I think the risk reward ratio would again become favorable to take some contra calls. So if you are already holding the stock, and you can keep some mid to long term perspective, maybe next 6 to 8 months or 12 months, then continue to hold. And when the stock drops around that 620, 600 range in the near future, you can look to average out at those levels.
Okay. I want to also bring your attention to Prince Pipes. Quite weak in the last 1 month odd. We have a query coming in from Kamalaja and she wants you to recommend whether to buy the stock or not at the current juncture. What is your call?
Yes, we have seen some relative outperformance to other stocks in this one, and the major long-term support for the stock is now coming around 495, 480 range, which is still about 20% lower from current levels. So in between, pullback moves could be there, but in case if you are looking to buy it or do some bottom fishing, so wait for some more corrections, maybe towards that 500 or 480 range. This could be a good contra bet.
HDFC Bank is the next query that we'd like to address. This is from Jammi Shetty Balu Naidu, and he wants your view on the shares of HDFC Bank. And clearly, this one has been an underperformer amid all the blue chip companies, especially if we look at the banking space. And a lot of brokerages, a lot of analysts have also flagged off some concerns with respect to returns. What is your sense on the technicals?
I think that's the main reason, Karuna, why the stock has seen underperformance recently. Although the stock is trading near its previous swing low support, so a pullback move could be expected in near term towards 1400 mark. But I think there are no signs for a resumption of a broader degree uptrend or the outperformance which we usually see with SDFC group stocks. So maybe a time-wise correction is going on in the stock, which could continue for next few months. Within the private sector banks, I think whenever the banking space shows an uptrend, ICICI Bank could show some decent outperformance compared to HDFC Bank. So for investors, I think it's better to go with ICICI Bank compared to HDFC Bank.
Ruchit, two of our viewers want to know your view on EICHER Motors. One is Debabrata Mohanta. He has posted a question, and also somebody called Suryakant Mahapatra, because he's asking if one has already bought into EICHER Motors shares, should they hold or should they perhaps exit and enter again once later when the stock cools off or there is a dip, a meaningful dip on the counter. But EICHER Motors actually has been a smart mover in the last 3 months, yielding good gains for its investors. Yes, it has seen its fair share of volatility and divergent moves, but net, I think 3-month performance has been fairly encouraging. In keeping in mind the way the markets have played out.
Yes, certainly. I think this auto space definitely has seen some good buying interest in spite of the market volatility, which has led to this outperformance. So even EICHER Motors, if you look, although the stock has seen some correction, but it's not that high compared to other stocks that we have seen in the broader markets. And the stock is still holding above its support of 2400. So you can continue to hold the stock with the stop loss below 2400 and expect targets towards 2850, 2900 on the upside in the short term.
Okay. The next question is from Shakti, and they want your views on 2 PSUs. One is HPCL, the other is Punjab National Bank. So if you could address them one after the other.
HPCL, I think if any existing positions are there, they should be held on. We have already seen a good price-wise correction in the last few months since the month of October. And of course, with volatility in the crude oil prices, this stock tend to show some higher volatility. But this is not the price where one should look to exit due to panic over here. Wait for a pullback move towards 260, 250 range. When it comes over there, you can again review the stock. So continue to hold on to HPCL for a pullback towards 250, 260. I think within the PSU banks, PNB has already been an underperformer even when the markets were going up or even when the other PSU banking stocks were doing well. So better to take an exit from the stock. In the short to medium term, we do not think that PNB would show any kind of up move or outperformance. In case the PSU banking space picks up or shows any positive move, then of course the leadership would be taken by the State Bank of India and followed by Canara Bank within the PSU banking space where charts are positive. So I think it's better to take an exit from PNB and shift to SBI or Canara Bank within the PSU banking basket.
Okay, fair point. Abhilash has written to us and he wants your advice on JSW Energy. Last 1 week, I think the stock has been trying to sort of bounce back from 180 odd levels. It has recovered a fair bit, about 15-20 rupees on the counter. But is that uptrend, can it sustain?
So primarily, we have seen a low top, low bottom stock structure on the daily chart. And just because the momentum readings have gone into oversold zone, so we have witnessed some pullback move from lower levels. This should be just taken a pullback, which could extend towards 220 to 225. And if we look at a bit longer term charts, then this stock seemed to be retracing the entire uptrend that we have seen from its lows in last 3 to 4 years. And retracement supports for the stock are coming around 160, 170 range. So I think from 220 out range, the stock could again see one more leg of correction towards 170, 160, where the stock would become a good buy. So in case if you are a trader, then a pullback move towards 220 could be used to exit positions. And if you're looking to enter the stock, then wait for a correction towards that 170 mark where some bottom fishing could be done.
Okay, all right then. We're in the last leg of the show. We want to understand what are the stocks that you are keeping on your radar and perhaps would like to recommend to our viewers.
So a couple of buy recommendations, Karuna, from my side from a trading perspective. First would be a buy call on LIC Housing Finance. You've seen a very sharp correction recently in the stock, and if I look at some of the derivatives data, then then we have seen very significant short formations in the stock, and the prices are now trading around the support. Now, usually this such thing happens that during the entire series where the stock is short heavy and prices come near the support before the expiry, then the short covering moves are witnessed. So we are expecting some short covering ahead of the expiry. So one can go long with stock below 296, expecting target somewhere around 320 to 325. And my second pick would be a mid-cap stock, which is NOSIL. NOSIL can be seen that this stock has seen some relative outperformance in last 2 or 3 months. And whenever the prices are going up, they're going up with good volumes, whereas price corrections are not backed by any kind of higher volumes. Stock is trading around the support end of a channel. So we expect some up move from here on. So NOSIL can be bought at current levels with stock below 230 for a favorable targets around 254 in next 2 to 3 weeks.
Okay then, Ruchit, thank you so much once again for joining in and for helping our viewers out with their questions and their queries and for giving us a preview to what to expect in today's trading session. That's all we have in this edition of Morning Trade. Stay tuned. Markets with Santo and CJ is coming up next.